everybody, and welcome to week 7 about collection budgets. Each part of the collection lifecycle has implications for budgeting. The purpose of this lecture is to suggest practical ways that libraries can create and manage collection budgets, strategies for maximizing budget reach, and tracking costs. This is a broad overview of library accounting and budgeting that is not meant to be comprehensive, but which acknowledges how a quality collection is impacted by fiscal matters. For a more comprehensive look at budgeting and accounting in libraries, we recommend state library resources such as the Library of Michigan's Public Library Financial Management Guide, or William Sannwald's, that's S-A-N-N-W-A-L-D, William Sannwald's. He has a book called Financial Management for Libraries, which includes both public and academic libraries. We'll put a link to those in the module. Before we delve into collection budgets, a general understanding of library operations budgeting is necessary. Library types are organized differently, and their revenue comes from different sources. For example, a public library may be funded by property taxes collected at the local level with other state and local sources as funding supplements. They may be funded as a department of the city or county government, or they may have a dedicated millage that establishes the library as a separate taxing entity. Academic libraries are usually funded by their parent institution, but may also be funded through grants, gifts, or endowments. Special libraries in law firms, medical facilities, or corporations often serve for-profit agencies and are funded by those entities, but they may also receive grants and endowments. To add even more complication to understanding budgets, nonprofits and government institutions can be subject to individual bylaws, state and local laws, and of course the myriad of rules tied to endowments and grants. Government entities have different ways of reporting their revenue and expenses than private industry. For a publicly held entity, accountants use what's called Generally Accepted Accounting Principles, GAAP, which refer to a common set of accounting principles, standards, and procedures issued by the Financial Accounting Standards Board, FASB. Government units have similar standards that are covered by Governmental Accounting Standards Board, which is GASB, G-A-S-B. Different library types also plan their expenditures according to their unique purpose. While every library will have expenses like utilities and staff and facilities, technology, a public library may allocate spending in categories like public programming and community relations, whereas an academic library may focus on e-resources or archiving. There's a link in the module called Michigan Library Establishment Types. While it is specific to the way Michigan funds libraries and Michigan library law, it includes a column on funding and gives a good overview of how one state handles different types of libraries. We encourage you to look at your state library's website to see if they offer a similar chart or explanation. Any library with a collection will likely have a collection budget. This is money that's earmarked for selection of books and materials for patron access and is usually separate from the money earmarked for other parts of the collection life cycle, like processing, cataloging, or repairs. The piece of the operating expenditures that is allocated to the collection will depend on the philosophy and the mission of that library. In Michigan, a 3-tiered benchmarking system called QSAC, which stands for Quality Services Audit Checklist, can help public libraries to determine what % of their operating expenditures to allocate to collections. QSAC recommends a minimum of 7% for the essential tier, which is the lowest tier, a minimum of 11% for its enhanced tier, and a minimum of 15% to achieve the highest tier, which is the excellent tier. There is a link to QSAC in the module. There are different ways to structure collection budgets. In fund accounting, there are several funds that help libraries track collection expenditures. The terms associated with funds are fund allocation, which is appropriations, encumbrances, expenditures, and free money. We'll go through these on the next couple of slides. The funds can be divided into individual collections, formats, target audiences, or programs. For example, a public library may divide its collection funds by department, such as youth, teen, and adult. Within each department, it can be further subdivided by material type or specific collection, such as video, books, audiobooks, music, etc. An academic library may allocate funds to academic departments or programs of study, and then further subdivide by material types like serials, monographs, maps, or ebooks. Let's look at a specific fund allocation example using easy numbers to illustrate. We'll say a public library director decides that the collection budget for the library is $1 million for a particular year. A really high number, but for the ease of example, we'll say it's $1 million. The adult, teen, and youth department managers decide to divide that money into 40%, which is $400,000 for adult materials, 30% or $300,000 for youth materials, and the last 30%, $300,000 for teen materials. The managers could then each take their portion and divide it or subdivide it again by individual collections within their departments. For example, the adult department manager may subdivide their $400,000 into $100,000 for adult fiction, $20,000 for each nonfiction Dewey category, $50,000 for movies, $50,000 for audiobooks, etc. The youth department manager may subdivide their $300,000 into specific budgets for picture books, chapter books, easy readers, or whatever. And the teen department manager could subdivide their $300,000 according to the collections that exist for the audience they serve. Smaller libraries may choose not to subdivide at all, but instead to keep their budget at the departmental level. Yet another option is to include the collection in a bigger picture programmatic budget. Maybe you're focusing on a new makerspace this fiscal year and all materials related to making, STEAM books, Library of Things equipment, databases like Creative Bug or Learner Maker Lab, as well as all the staff, all the equipment, and the supplies for the makerspace itself. In each of these examples, the director's concern will be for the overall collection budget, the full $1 million. The department managers will focus on their departmental allotments, and then individual collection managers will have authority over the budget subdivisions for the collections they manage. They may divide their allotment into 12-month increments or even weekly increments for selection purposes so that they ration their budget over an entire fiscal year and always have new materials added throughout the year. Depending on the collection and the particular librarian, they might also allocate a percentage of their budget to replacement materials. According to BIBEE, B-I-B-E-E, linked in the module, the quote here defines encumbrances. It says, encumbrances represent earmarked money set aside to pay for committed orders when payment is due in the future. So when funds are committed, it obviously reduces the funds available for spending, and it has to be tracked carefully. Sometimes encumbrances are an estimate, like when databases or other subscription services are prepaid to cover a full year of service. Collection managers set an expectation, adjusting for inflation, and build that cost into the annual collection budget. This can get complicated, especially if an encumbrance straddles 2 fiscal years. Adjustments can be made to pay for the service or the product received in 1 fiscal year, with the remainder rolled over into the next fiscal year. This is an example of accrual accounting. Busby, B-U-S-B-Y, linked in the module, said, quote, if one has not received goods within the fiscal year in which the payment was made, then, for accounting purposes, the record of the payment for these non-received goods is deferred to the fiscal year in which the goods arrive, end quote. If a library pays for a year of a magazine subscription, for example, and they receive the first 6 issues in the current fiscal year, then they would pay for 6 issues worth of service. The remaining 6 issues, which will arrive in the following fiscal year, will be accounted for in the new year budget. However, the magazine service expects payment for a full year of service up front, so the library pays for a full year of service in the current fiscal year, but encumbers half of the payment into the new fiscal year, the next fiscal year. There is also modified accrual basis, in which expenditures are recorded when the items or services are received, not when the invoice is paid. And there's even a third type, cash basis accounting. In this simple model, revenues are recorded when funds are received and expenses are recorded when funds are paid. The basis of accounting that a library uses is important to understand. Collection managers need to time their orders according to when the item will arrive and or be paid for. If a library's fiscal year is January to December, for example, they may choose to hold off on ordering new materials in the month of December to ensure that they will not arrive too late to be paid for out of the current fiscal year. Depending on how stretched or how comfortable their collection budget is, they may also find it perfectly appropriate to have a late fiscal year materials order arrive in the new year and then be paid for out of the new budget. Collection decisions like these can depend on what happens to leftover funds at the end of the fiscal year. Are they rolled over into the new fiscal year? Are they allocated to the same line item? Or is unspent collection money moved into a general fund, a capital project fund, or some other fund that is not necessarily earmarked for the library's collection? Expenditures are an easier concept. They are payments for goods or services received. So in accounting terms, expenditures are both invoiced and paid and subtracted clearly from the fund's balance. Free money is the fund allocation minus encumbrances and payments. It's the amount that's currently available for new purchases. The first step in a budget request is to look at how money was allocated and how it was spent in previous years. The library's ILS, or its computer system, or its accounting software can provide details of actual expenditures. So you can see if any subdivisions of the collection budget have been typically overspent or underspent. So if, for example, the adult fiction budget was underspent every year for the past several years, but adult e-resources have been consistently overspent, you might want to allocate more to e-resources and less to fiction the following year. Paying attention to these year-to-year trends and adjusting accordingly makes the budget process much more logical. It is also easier to get staff buy-in when budgeting decisions are based on this kind of data. Another way to reallocate collection budget subdivisions is through circulation data. Compare the percent of the total collection budget allocated to any particular collection to its percent of total circulation in the department. For example, if adult fiction makes up 50% of the annual circulation of adult materials, consider allocating 50% of the collection budget to that collection. Now, of course, there may be other considerations like how much shelf space is available, the average physical size of items in the collection, and average cost of items in the collection that need to be factors in as well. There are always other budget considerations. For example, intermittent library closures during the COVID-19 pandemic created an increase in use of electronic materials, and there was decreased demand for print at that time. The pandemic also highlighted some issues for the travel collection. With restrictions in place for travel, the need for travel materials was not as urgent as other areas, including job search, job skill improvement, medical information, and financial information. The manager of the Adult Services Department might need to decrease or increase certain collection budget allocations based on changing community needs and trends. Aside from collection needs, the amount of revenue a library collects can also fluctuate from year to year. During an economic crisis, major layoffs, increases in personal bankruptcies, foreclosures, and businesses closing could result in less tax revenue collected, and budgets need to decrease accordingly. Again, those intermittent library closures due to the pandemic caused furloughs, layoffs, personal protection equipment expenses, and pivoting of expenditures from print to electronic resources, as we mentioned. Libraries saved money on building expenses and spent more on technology. So from a workflow point of view, as was mentioned before, the library director will establish the top level budget number, and the department heads can allocate those funds according to the factors we have discussed in this section. There are different ways to strategize a budget, to stretch it further, make the money work for your situation. Here are some of those strategies. The first one is reduce the number of copies purchased. If you can do so without making patrons wait too long, that's great. Consider fewer formats of each copy too. Maybe you'll just buy the regular print and the audiobook, but certain titles or interest authors just are not of interest to people who read large print or to people who listen to audio or whatever. Paying attention to those trends can help you decide what you really need in each format and how many copies you need. The second one, review lending periods. Shorter lending periods might turn over certain materials faster and help move through the holds more quickly. This is not, always feasible with super big or long books or audiobooks with 1 million discs or whatever, but just review the lending periods. Do they make sense for the materials that are being circulated? Do materials turn over at a rate that makes sense? The third one is delay purchasing when possible. If it's the end of the fiscal year, consider pushing purchases to the next fiscal year. Another one is review hold policies. You can limit the number of holds allowed in certain collections. You could make certain collections not requestable. Our library has a collection called Lucky Day books. If it's on your shelf, it's your lucky day, but you can't place holds on them and you can't renew them. Those items, again, they just turn over faster. They have a different hold policy to make sure that they're available more often. You can also review standing orders. Do you still need them? That whole out of sight, out of mind thing when things just show up because it's easy. We had a lot of standing orders for travel materials. And as we mentioned during the pandemic, there was at least a year when our patrons were not traveling. We didn't need all those standing orders. So when the Foders and the Frommers and the Lonely Planets and all of the things showed up because they were on standing orders, we needed to revise those standing orders and review the continuations and standing orders that were in place. Ask yourself what you need that year. Standing orders are great. They save you so much time. They're sort of hands-off. Things just show up. You don't have to keep track of, the next James Patterson book because there's 4 of them every month, right? You know you're going to buy it. It just shows up and it's fine. But things like those travel books or there could be other standing orders that you have that maybe don't make sense a certain year under certain conditions. Next, market interlibrary loan services. Help patrons borrow materials from other libraries rather than trying to purchase every title requested. You can also reconsider replacement purchases and repairs. Not everything needs to be replaced. And if the time and the material to repair something is more than the item is actually worth, weed it and move on. Next, you can avoid prepayments. Cash flow has an impact on budgets. So prepayments, especially for e-resources or databases, they might be convenient, but they may also commit limited funds to one resource, limiting the flexibility of moving funds around as needed throughout the fiscal year. Next, understand the collection priorities. Collection philosophy and specific collection projects are a team effort, and intentional collection management ensures that the available funds are spent the most wisely. Next, you can negotiate or seek product alternatives. Find out if your state library association or regional library cooperative has group discounts or suggestions for alternative products. Maybe a particular language learning database is too expensive, but your co-op has a discount on a different one. You can also cultivate vendor relations. Relationships with vendors are important to smooth transactions. They will be more willing to help you with specific billing issues, invoicing preferences, returns or replacements, things like that, if they like working with you. Affiliate programs. Find out if there are corporate accounts for online vendors that pay commissions for shopping with them. Amazon no longer does this with corporate accounts, but Better World Books will pay a commission on every book they resell that came from our discards. And another one that's a little more controversial is outsourcing. You can outsource selection, cataloging, or processing to the vendors to save staff time and staff budget on those activities. You also don't have to purchase the processing supplies to pay for a membership to a cataloging service like Sky River or WorldCat, or pay for subscriptions to review journals. However, most libraries like to retain more control over collection management than outsourcing allows. Those are just some ideas for strategizing how and when you use your budget. Rolling out new collections and formats has an associated price. Libraries need time to market and develop new collections, so they should not invest in them unless they can commit. Introducing a new collection or a new format and then not having the money to develop it just teases library users. Patrons will try out the new items and hopefully come back for more. If only a few items are available with no plan to add more, the collection can't satisfy its users. Collection budgets need to be adjusted for new collections so that they can be properly funded. New collections and new formats have processing costs too. New stickers, new cases, and other finding and shelving aids have to be stocked. Especially in a down economy, a sober approach to collection management should be taken. Don't introduce new collections, new formats, new shelving arrangements, displays, stickers, etc. At a time when money is tight. They won't get the monetary attention necessary to reach their benchmark as a successful collection. Try to see the bigger picture and remember that everything is connected. We say that a lot. Consider the impact of the little things and how collections are presented. One seemingly small change can impact any other part of the collection life cycle. Consider the example of a public library patron who suggested that the library create a separate collection of inspirational fiction. In order to do this, the library would need to spend time identifying all the titles in the existing fiction collection that fall under that subject. They would need to relabel, relink, and possibly recatalog each of these titles with the new subject information. They would need to find or create a shelving area to display them, as well as new signage. They would need to include this new collection in the collection management policy and write collection objectives and write collection benchmarks. They would need to set aside funds to support this new separate collection so that it would continue to grow and to update. They would need to train staff about the new collection and assign someone to manage it. The patron just thought that moving some books to a new area would create this new collection. And it's not necessarily a bad idea, but it's one that the library has to plan for carefully. Making the most of a collection budget means creating collections and subdivisions within that the library can support financially. Many library types can benefit from grant writing, and there are a variety of grant types and granting institutions to be considered. Some require very specific projects and reporting, and others are very simple, very flexible, one-time gifts. In general, grants can help pad declining materials budgets. Many libraries have Friends of the Library groups, and these groups support the library through financial contributions and volunteer projects. Many Friends activities can supplement a library's materials budget. Friends Group often manage used book sales and solicit donations of library materials. When donations come in, library staff and Friends volunteers can go through them for titles the library can use in its collections. Out-of-print titles, rare editions, and extra copies of popular materials can often be found within library donations. It is well worth the time and effort to enhance a library collection to go through the public's generous donations in pursuit of useful items, especially in smaller libraries with smaller budgets. Endowment funds are another funding source. Endowments are investment funds established to support an institution like a library. So when someone donates to an endowment fund, the money is invested, sometimes for something specific like library materials, and sometimes to more generally support the work of the library. Usually these donations are tax deductible for the donors. Libraries have to follow the withdrawal, usage, and investment policies set for their endowment, but could certainly specify ways the money could be put toward enhancing library collections. Budget transparency means that a library administration should be able to explain each expenditure. That means every dime spent should be accounted for so that year-end totals reflect the activity of the library. Once the fiscal year is completed, a public library will engage a public accounting firm to audit the financial statements and test the procedures in place so that accurate information is being reported in the year-end financial statements. Auditors are not concerned that transactions are the best options for the library. They don't question which vendors the library does business with or what services and collections the library provides to its patrons. They audit procedures and processes and occasionally sample specific transactions as proof of workflow. They also sign off officially that the financial statements fairly represent the summary of the transactions. This audit is not the kind of information that's going to reveal fraud or mishandling of funds. It is simply double-checking that most transactions were appropriately recorded and the internal processing of transactions is appropriate. So aside from transparent reporting, developing a financial policy for a library is also a great step toward making sure that the library is adhering to appropriate reporting practices. A financial policy could dictate that certain expenditures over a certain amount need to be board approved. It could also include rules for vendors and a bidding system. It can also spell out conditions that board members cannot bid on library projects. One of the best financial policy items to include is making sure that auditors are changed every 3 or 4 years. Fresh eyes on processes and procedures can keep the library from getting complacent with internal reporting. Transparency is about making sure that the appearance of a conflict of interest is minimized and that the library is operating with integrity and with care with the taxpayers' money. In accounting for any institution, there is basically money coming in from revenue sources such as taxes collected, state funding, even library fines. In Michigan, we have a law that says public libraries can collect revenues from the state from traffic tickets. So every time a state police officer issues a speeding ticket, libraries get a piece of the action. If that incoming money is not properly traceable through record keeping, the chances of it being misused are increased. The other end of this process is money going out. For most institutions, the largest expenditures are salaries and wages. Often, this number can be as high as 70% of a fiscal budget. Payroll is not just an hourly rate, but it's also taxes on wages, employee benefits, vacation time, things like that. The rest of the expenditures are made up of everything from some petty cash used for a teen pizza party to books for the collection. Accurate recording of these purchases is necessary and is usually managed by a purchase order. A purchase order is an internal numbering system that keeps track of these transactions. Frequent transactions from ongoing book vendors, big companies like Baker & Taylor or Ingram, are organized with blanket purchase orders, which means they cover more than a single purchase. The purchase order system allows the purchases to be organized. All relevant information is kept together. Modern accounting software usually can manage all of the purchase orders, payroll, and also record incoming funding. The final piece of this budget discussion concerns library staff communications with patrons. Employees need to be careful to not call library services and collections free. Libraries are funded somehow, and very often through the tax dollars of their users. Library workers should point out to patrons whenever possible that the library exists because of community funds. Being transparent about the costs of services and collections is a great way to show stakeholders that staff is mindful, we're careful, we're attentive to how the library budget is spent. What you see here is really a really basic chart of accounts. This is actually a simple organizational system for money. All transactions, whether you are General Motors or mom and pop library, involve only these 5 types of accounts. The numbers are just to aid in keeping items organized. The number can be whatever you want. Assets are just what it says. Cash, money coming in, also known as accounts receivable. Equipment, or maybe even a building. Anything that has value. Liabilities are money you owe or debts. Cash and liabilities are changing all the time as money comes in or bills get paid. The numbers are for convenience. For example, the library might have 2 cash bank accounts, one just to use for payroll checks and a general all-purpose account. Both are cash, but we'll give them 2 separate numbers so we can classify them easily. Because they are assets, we'll say they start in the 1000s. The 3000s on this chart are equity accounts. In large corporations, this is where any profits or losses end up. Don't worry about these accounts for now. What most of us will be concerned with is the revenue accounts, the 4000s on this chart, and the expense accounts, the 5000s. These general revenue and expense accounts just help us distinguish what kind of revenue or what kind of expense. As always, there are lots of links and articles and things in the module that I hope that you will explore and investigate. There is also a discussion post this week, and I have some suggested discussion starters, although, as always, you can write about whatever you like. The first one is choose any library and look at their operating budget. What % of the operating budget is allocated to the library's collection? How is it broken down into books and materials and purchases, cataloging, processing supplies? How is the money allocated in the operating budget for the different parts of the collection life cycle? Next one, how is this library's collection budget structured? Does it separate funds by department, formats, audience, subject matter, or some other way? Does anybody have a programmatic budget? They're less common, but they're interesting to see. Why might funds for collection development not be divided equally between formats, audience, subjects, etc.? What kind of criteria goes into deciding to allocate more or less money to a particular piece of the library's collection? If you work in a library, how does your library track expenditures, encumbrances, and free money? What kind of processes and procedures, what software is used, what workflows are in place, what staff are designated to these processes, and what other resources are in place to keep track of the collection budget? And finally, as we suggested early on in this lecture, check out your state library website. What kind of helpful financial and budgeting information do they make available? Have a great week, everybody.